to the Not Podcast. This is Michael Mandel, and I'm here with Kugel, and we are here to tell you about CompStak's year-end market office report. And we are also here with Ali and Jacob from the CompStak Real Estate Intelligence team. So they are going to tell you about all the hard work they've done in analyzing the U.S. office market. And that covers 11 major U.S. markets, including New York, San Francisco, Bay Area, Dallas, Atlanta, Boston, Chicago, D.C., Philly, and a couple more. This report should be really valuable to those of you who are in commercial real estate investors, lenders, brokers, appraisers, whatever the case may be. Hopefully you'll find some valuable insights from what we've learned. We're going to get started by talking a bit about office employment and work from home trends, and I'm going to pass it on to Jacob to give us some insights.
Hey, Michael. So we took a look at office using employment and gateway markets for this report, and what we found was we saw a slight dip, just 0.1% in 2024. And so yes, that's a decline, but it's still better than 2023's decline. And when we talk about office using employment, we're talking about workers in finance, professional services, TAMI, which stands for technology, advertising, and media and information. So in other words, finance was up and TAMI and professional services were down.
Great. Let's talk a little bit about leasing and rent trends. Ali, you want to dive into that a bit?
Yeah, sure. So people are always asking us, what's happening with rents. And of course, we track the rents that deals are actually getting signed at. And so that would be the starting rents of office deals, as well as the effective rent, which means the rent after subtracting concessions like free rent and TI. And it's hard to believe, but have been seeing rents go up, but that's largely been because of the flight to quality. So that is movement in rents that are in the class we call prime class A. So we call that anything that's a trophy product, new construction, recently renovated. And again, we saw in 2024 that it reached new heights in terms of the average effective rent. But we're starting to see that that might be peaking, and that's largely possibly a result of a lack of new supply in the market for that kind of space. And we're starting to see, which we talked about, Michael, is a little bit of movement in rents in other kinds of office space. Certainly the rest of Class A, but now a little bit in Class B space.
Got it. And that's an interesting trend to watch, right? Because everyone has been talking about trophy in Class A for a while and how that's been a bright spot in the market, but actually seeing a trend towards rent increases go beyond, trophy and certainly Class A might indicate more of a recovery than just at the very top of the market and more than just this flight to quality, right?
Yeah, I think it's, we're cautiously optimistic that, it will continue. I'd say it's an early sign of the trend and that we saw increases at the end of 2024. And remember here, we're talking about the average across gateway markets. Later, we'll talk about where it's sort of true and not true in terms of this recovery for B and C space. The general thought is that as sort of office users run out of options in the best of the best space, that they may start looking in lower tiers of office space. And remember, office building classes, I know you pointed this out, Michael, nothing certainly neatly fits into every category. There's differences in Class B buildings just as there are in Class A buildings. So it's not felt uniformly across Class B at this point, but in sort of the better Class B buildings, depending on location and renovation and that sort of thing.
Absolutely. Okay, that makes a lot of sense. Can we take a little bit of a deeper dive here and talk about some of the big leases that happened by industry in the past year? Specifically, would be interested to hear more about TAMI because I think that we saw TAMI leave the market for much of 2024, right? And do you think TAMI's back, and what industries do we think are gonna shine in 2025?
Yeah, so the big takeaway is that New York City led in high value deals and some of the biggest lease transactions. They were all in New York City. And a majority of the top five most valuable deals across the sectors of TAMI, but also legal services, fire, and life sciences were in New York City. Now, with the exception of OpenAI's deal for 238 million in the San Francisco market, the fourth quarter saw most of the top TAMI deals signed in the fourth quarter. And the top most valuable deal overall in this category was Bloomberg, who leased almost 925,000 square feet for a total of 719 million. Law firms, also several law firms signed some top deals, including Ropes and Gray, Wilkie Farr and Gallagher, and Winston and Strawn. They all three signed for spaces in Midtown Manhattan buildings. And those were three of the most valuable legal service deals. There were also a lot of extensions and renewals among top fire deals, with all but one of them choosing to expand their footprint. TPG was the only new lease within the top five in that sector, and they signed a lease with the highest total consideration of all of them at over $1 billion. And you mentioned, and Michael, you mentioned TAMI. Is there a comeback in the works for TAMI? Are tenants in that sector, signing more top deals? Potentially so. The share of leasing by TAMI tenants reached the highest level since 2021 and 24. And with a lot of these lease expirations, they're coming up in 2025, 26, all the way through 2027. They could help fuel the leasing rebound.
Great. Well, I think everybody's been waiting to see if Tammy could come back, so we're excited to see that happen. Interesting timing. Certainly, the day that we're recording this, is an interesting day in the real estate market. It's the day after what did Trump call it? Liberation Day, or and we're seeing a big dip due to tariffs, particularly in tech stocks. In particular, Apple is down, I think, 9.5% today. So it'll be interesting to see what the impact is. But I think really it's going to be any companies that have a meaningful impact from imports, right? So, but let's actually dig into some of the markets more specifically, because I think that certainly there's been good buzz around the New York market. There's been certainly a lot of buzz around, trophy and Class A in major urban markets. But what a lot of people haven't been hearing about is what's the difference between urban and suburban, and what's the difference on a market by market basis. And if we could dig in a little bit to help our audience better understand how different markets are performing and how that varies between urban and suburban, I think that provides a lot of insight as to where the market's going more broadly.
I think, Michael, as you brought up, it's not the same story for every market. And there is definitely a bifurcation in the market. And that is that not all markets are improving at the same rate, and it differs between, sort of the central business district of a market versus suburban, Class A versus Class B and C. So what we did to try and, speak to that issue is we did an analysis of the 11 markets in our report. And broke them into suburban and then CBD urban areas, and then also Class A versus Class B and C. And so it's really a mixed story. But what we saw is that there's overall more suburban areas just outpace CBD areas in terms of improvement. And the improvement that we're talking about is looking at effective rents, so comparing them to where they were in 2019, and then also comparing recent performance, so their increase from 2023 to 2024, to sort of get at this idea of recovery. And as you said, New York City's topped the list. It was one of the only markets where we saw a strong recovery for Class A, as well as for B and C space. Other markets where we saw improvement were Philadelphia and sort of the central PA, Delaware, South New Jersey market, and Dallas-Fort Worth. Those were all sort of in recovery for Class A and B and C. Not surprisingly, even though there's been a bit of better news for the San Francisco Bay Area market, largely because of all of the hiring and companies relocating there for AI. San Francisco and the Bay Area still ranked near the bottom of our list for both its suburban areas as well as its central business district areas. And then Washington, D.C. was kind of middle of the pack for both its CBD and suburban area. I remember this is looking at performance last year, so I was sure if you want to talk a bit more about DC, Michael, but I think we can expect that perhaps going over the next year that it would fall further in the rankings, unfortunately, because of what is happening with Doge and impacts there.
Got it. That makes a lot of sense, obviously. Sure. Doge is expected to have an impact in a lot of places, but DC for sure. So what do you think is next in 2025?
Great question. I'd say we found a lot of reasons for optimism in our 2024 report. We saw a decent number of markets in recovery. We saw movement in Class B and C space. Some of the, more negative things, if you're a landlord, we're still seeing record high concessions. Those are a good thing if you're a tenant. But I'd say we live in a rapidly changing world, and things have changed so much even from when we published this report. And I think there's, what I'm concerned about is sort of rumblings of issues with the economy. And even though we're talking about the office market here, what tariffs may do to the economy. And so I think some of that may weigh on, office users' decisions for office space over the next year. And so I'm feeling cautiously optimistic. Would
Fair
you
enough.
agree with that?
Yeah, it's I would say cautiously optimistic, maybe with in a day like today, maybe a little more emphasis on the cautious. Um,
Right.
but certainly I can tell you the sentiment we've been hearing, particularly from our clients on the office side, has been really quite positive as of late, and they seem to be feeling pretty good and seeing a lot of activity. And I think, the activity that we're hearing about in the market, we expect to see in, increased activity in actual leasing, on a go-forward basis. So yeah, I think overall there's reason to have some positivity in the market. I do think the concessions that we're seeing and the increase in concessions is a little bit of something to take pause in, but yet we're seeing rents increase, and I think that's a little bit surprising too, because often you see concessions taper before rents go up. Now we're seeing rents go up, but concessions continue to increase. That seems to be a little bit unusual, actually, in a time of recovery. I think that in part that can be because costs of construction have gone up dramatically, so the TIs have had to go up. But the free rent, I think, is the one that has been the most surprising to me because we've seen just massive increases in free rent in both new deals and renewals, right?
Yeah, no, that's an interesting thing to point out. And we were asked this recently in a panel, but lease term lengths have gotten longer. So when you're comparing the free rent to the share of the lease term, things are moving up relatively proportionally. That's not necessarily such a bad thing. In the depths of the pandemic, remember we're 5 years on now. We saw increasingly shorter lease terms, and we're not seeing that anymore. There's been a general improvement to kind of the pre-COVID lease length when you look at the average. So
Sure.
that's one good thing.
So what do we think that CRE professionals should be watching for 2025?
I think we should be paying attention to what the major users, the decisions that they make. As I just said, we're 5 years on from COVID, so there's still some companies that have not made their kind of post-COVID plan about, what are we going to do with our office space? Are we going to move? Or are we going to stay? Something we covered in our report was the share of lease expirations that are coming up. And so that's something to pay attention to. Will we see more renewals or will we see a move to relocate to better office space, different office space? Those would be the things that, I would pay attention to and the decisions that people make over the next year.
Yeah, I would agree, and I think that generally, there's not a lot of supply of new better office space to go after. So I think, you're probably going to see. I would, have to assume a higher number of renewals in place, and or certainly relocations within older buildings, which will be a nice boon for some of those older buildings as well, until we start to see some new supply come back on the market, which should help the market, I think, more generally as well. And also, we didn't even really touch on it much, but obviously there's been some supply taken off the market as well, as some buildings have been converted from office to other uses. So, in any event, there's a lot to watch out for in 2025, and we will keep everyone abreast on it. And to dig in more into all this data, this is a pretty extensive report. So you can read the full report by downloading it from the CompStak website. And also, we encourage everybody to follow CompStak and follow the Not Podcast podcasts on Spotify, on Apple Podcasts, on YouTube. Check for new episode drops and like, comment, and subscribe. Thank you very much.